Hello, everyone. Welcome. We'll give it a few minutes while people start joining.
Hi, good afternoon, everyone. Faisal, I was saying before, I love these 4 p.m. webinars. And I'm
Yeah,
sure we're probably getting some people on the way home from work, or some people finishing work, or some people already home. So it's kind of a nice balance compared to the usual 6 p.m. ones.
yeah. I love Ramadan schedules. They're very efficient, I should say.
Yeah, it's a good way to put it.
I'm joining you from Saudi today, from Jeddah, Saudi. It's pretty rainy here today. I don't know what it's like over in Dubai.
Yeah, I mean, it's not, I'm looking outside out of the window right now, and it's definitely not rainy, but it's very hazy at the moment. I don't know if that's
Mm,
dust, or if that's clouds, or if it's pollution or whatever it might be, but not looking too bright over here. But maybe that's, I mean, probably depends which part of town you're in. But yeah.
yeah, yeah. All right. So while we wait for a few people to join, maybe we can start by introducing ourselves. So, Salam alaikum, everyone. Welcome. Thank you for joining us. My name is Faisal, a wealth advisor here at Sarwa. Thrilled to be with you all today. I'm joined by my co-host, Akshay, who's also an advisor here at Sarwa. Today, we'll be exploring how to build a diversified portfolio that aligns with Islamic principles, whether you're new to investing or already experienced. We're here to help you better understand how to structure your investments to match your ethical values and long-term financial goals. So, Akshay, do you want to
Yeah,
introduce yourself?
Yeah, definitely, Faisal. Thank you for that. And thank you, everybody, for joining us today. Ramadan Kareem to all. My name is Akshay. I am one of the wealth advisors on the team here at Sarwa. My background is in banking, private wealth management. Started my career at the Canadian Imperial Bank of Commerce in Canada. Following that, worked for a British private wealth management firm. I'm actually licensed and qualified as an advisor from both the Canadian Securities Institute and the Chartered Institute of Securities and Investments, and been with Sarwa now for about 3.5 years. Time definitely flies. But look, today, really excited to discuss this topic. I think a lot of times, investing up and aligning those investment decisions with your principles tends to be quite challenging. So we want to try to demystify that a little bit, and try to really show, our audience how you can construct a really robust investment portfolio that aligns with Islamic principles. Faisal, maybe if you want to give your brief introduction to yourself, and then we can get started.
Thanks, Akshay. As I mentioned earlier, I am a wealth advisor at Sarwa. I've been here for just over 3 years as well. Time really does fly. My experience covers or spans across the US, Saudi, and the UAE, mainly focusing within the fintech sphere. Yeah, I'm excited to be here with you all today to talk about halal diversified portfolios. Before we begin, though, just a few disclaimers to get out of the way. Neither Akshay nor I can predict the future. We don't know what's going to happen in the markets over the next few days or months. No one really can. Also, the views shared today should not be interpreted as one-on-one advice. Please remember to always do your due diligence and understand that all investments carry risk. Also, please feel free to leave your questions throughout this webinar in the chat function or the Q&A function, and we'll be sure to get to them in the Q&A part. With that said, let's dive in.
Awesome, let's do it.
All right. So the foundation of a halal portfolio. Halal investing aligns one's financial goals with their religious and ethical principles. This is guided by a clear set of criteria and rules. And let's break down what makes an investment halal, what is the screening process behind it, and why diversification matters. So, halal investing involves choosing assets that align with Islamic ethical values. It avoids sectors that conflict with Islamic teachings and the avoidance of riba through a screening process. Now, this screening process filters on three key areas: sector screening, financial screening, and dividend purification. So for sector screening, this will avoid companies that are primarily involved in prohibited activities like alcohol, gambling, pork, tobacco, conventional banking, and weapons. For financial screening, this will exclude companies with high debt and those with excessive interest-based activities. For both those elements, it should not exceed 33% of equity. Now, lastly, for dividend purification, this ensures that any income derived from non-halal activity is purified and donated to charity. Sharia principles also incorporate risk mitigation, which can be achieved in part through diversification. And diversification is important because it spreads the risk, but also enhances the stability of a portfolio. And the key assets included, or that we are going to cover today, are stocks for growth, Sukuk for stability, gold and real estate for safeguarding your portfolio, and potentially crypto and digital assets for alternative diversification. By following these guidelines, you can build a balanced portfolio that's in line with your beliefs while effectively managing risk.
Awesome.
Um,
Faisal, I actually interesting one, right? You brought up diversification, and diversification is the solid foundation of any investment portfolio, right? Regardless of whether it's
right.
Sharia compliant or if it's a conventional portfolio, whatever it might be. But I think a lot of people think that halal investing means fewer options. But in reality, diversification obviously still is possible. So you mentioned some of these key asset classes, but so what are those main ones that need to be included in a well-balanced portfolio that is Sharia compliant and halal?
Absolutely, absolutely. Traditionally, or usually, when we're talking about halal portfolios, clients always assume that that means less options, but that's definitely not the case, as you pointed out. So, as I mentioned, stocks can be included within a diversified halal portfolio, sukuks, gold and real estate, and potentially crypto, which we'll touch on later within this webinar. So these will provide growth. They can provide growth, stability, hedging against inflation, and alternative and modern investment opportunities as well. And really, when we look at these types of portfolios, usually there is kind of an expectation that these don't perform as well as conventional portfolios. And that's not necessarily the case. So over the long term, returns for halal portfolios can be comparable or even superior to conventional investments. And we don't have to look or go too far back to see this in action. And I'm referring to 2008. So I'm not going to go too much into 2008 because that's your section, Akshay. So you want to walk us through how halal portfolios fared during 2008?
Yes, I was going to say that that was the perfect segue to go into it. Now, actually, I've got a slide over here that says, why did Islamic investing do really well in 2008? But I want to go to the next slide, actually, because I want to actually talk about, look, what shaped all of this, right? What happened in the '08 financial crisis before the crisis, and what happened, in the initial stages of the crisis. So it was really interesting, right? Right before the global financial crisis in 2008, from around 2005 to 2007, right, leading up to that crisis, Islamic banks actually exhibited a sort of stable level. And it actually set them apart from their counterparts, right? It was very evident in their limited exposure to very complex financial instruments that contributed towards the financial crisis. And overall levels of profitability were relatively similar to their conventional peers. And some of them are actually slightly outperforming. So it goes back to your point about, look, in certain circumstances, these investments actually have the ability to outperform even their conventional counterparts. Now,
Right.
what's really interesting, right? As soon as the crisis hit, and this was at the very initial stages after the crisis, right? In the aftermath, Islamic finance actually garnered a lot more attention worldwide.
Mm.
The main reason is for two things, right? The stability of it and the ethical framework. So, and it makes, what, it actually makes sense when you think about it, right? Imagine if you're adhering to Sharia compliant principles, such as the avoidance of, you mentioned interest riba, very speculative activities. These are two things that played a very significant role in keeping this stability during economic turmoil, right? As you can see on this chart on the right, the profitability was not impacted anywhere near as much as the conventional banks, and their
Mm.
credit and asset growth actually remained really strong, right? Financial crisis highlighted the resilience of Islamic finance and this overall ability to provide stable and an ethical alternative to conventional banking systems, right? So this is kind of I guess, the context of what had happened, but I'm going to go back to the initial slide, but why is that, right? Why did Islamic investing do well during the financial crisis? There's a few things, right? There's actually, we've got three over here, but there's actually a couple more, right? And the first one is no riba. So the avoidance of interest-based transactions, right? Islamic finance prohibits the payment or receipt of interest. This principle led Islamic funds to avoid a lot of the complex, risky financial products that were at the center of the crisis. You've heard it before, the subprime mortgages, derivatives, credit default swaps, all of these things are leveraged, high risk, high interest. So they're not a part of Islamic finance. So they were actually, it's a big reason why it did well. The second thing is asset-backed financing, right? Islamic finance emphasizes asset-backed financing, where transactions are tied to tangible assets. And we're going to talk a little bit more about crypto towards the end, but this approach, right, it tends to be a lot more conservative, less speculative compared to the leverage-heavy practices that contributed to the crisis. Third thing is risk sharing, right? Islamic finance promotes risk sharing between parties. This helps distribute and mitigate risk. In contrast, right, it's conventional finance often involves transferring risk to third parties, and this leads to a lot of systemic vulnerabilities. And then also two other ones, right? There's prohibition of uncertainty and speculation. So Islamic finance actually prohibits these transactions that are very highly speculative, which is very in line with what had happened during these crisis points. And also the ethical screening process that you had mentioned, right? There are very clear there's a very clear screening methodology that goes through. Usually when that screening methodology takes place, you're not always, but you're usually in a more defined and clear parameter of risk and reward.
Thank you, Akshay. That's a great case for halal or halal portfolios. But can you maybe tell us, besides avoidance of riba, what can conventional investors learn from Islamic investing principles to and apply to their portfolios to make them more resilient?
Yeah, I mean, look, it's a good question, right? Because usually when we talk to clients about, whether you're investing in a Sharia compliant portfolio, whether you're investing in a conventional portfolio or a socially responsible
Mm.
portfolio, whatever it might be, I think the core principles of investing should still be there, right? But I think something that conventional investors, as per se, if you want to call them that, and some of the key lessons they can learn, I would say, is this limiting of excessive debt, right? Avoiding these highly leveraged companies reduces financial risk, especially in downturns. We've seen that historically. We've seen it worked well. Another thing is focusing on these real asset-backed investments, right?
Right.
Invest in tangible assets, right? Commodities, precious metals, these things that provide stability. And I would say the last one, and I probably align with this quite well, is avoiding high speculation and high risk trading, right? By
Yeah.
principle, Islamic finance discourages very speculative bubbles, and it actually promotes more long-term and sustainable growth. So I think if there's anything that you want to take from that, probably the avoidance of extremely highly speculative investments. But I think by adopting these sort of principles, conventional investors, they can definitely create a portfolio that's more stable, more ethical, and probably a little bit more resilient in the face of market volatility.
Awesome. Awesome.
So I'm going to pass it back to you for stocks, Faisal.
All right. Thank you, Akshay. So stocks within any context of investing, whether it's a conventional portfolio, a socially responsible portfolio, halal portfolio, stocks are a growth engine, right? And they're crucial for achieving long-term growth. And here's how to approach them simply within the context of a halal portfolio. One is invest in ethically aligned companies. So going back to the screening methodology, avoiding the prohibited sectors, checking their financial ratios to make sure they're in line with Islamic practices. And two, I would say use ETFs. This is a simple way to approach the selection process. Most fund providers will have in-house Sharia boards that will complete the screening process for you and also provide certifications for those funds. And ETFs, of course, are a really easy and effective way to achieve diversification, right? Instead of buying tens or hundreds of stocks, buying one ETF gives you exposure to those stocks and still within the framework or the context of Sharia compliance. It's also important to maintain, when investing in stocks, a long-term perspective and understand that market fluctuations are normal. Just like Akshay mentioned in 2008, that was a major, turning point for markets. But nonetheless, markets, were resilient and they recovered soon after. So stocks will inherently go up and down and over the long term, but that's how growth is achieved.
Nice. So like we I think a lot of people know, right? The stock market, equities in nature, they sort of drive growth for a portfolio. They're usually seen as that main driver of growth for anything long term. But not all stocks obviously qualify to be Sharia compliant or halal. You mentioned some of the criteria, but diving deeper, that sort of business filter. Yeah, what are the criteria that they actually use to screen for these Sharia compliant stocks? Like what type of things are the asset managers looking for, or should investors look for?
Yeah, so business activity is a major, major point, right? So checking to see what is this business engaged in, right? Primarily, uh, is it in line or is it conflicting with Sharia principles? So I mentioned previously tobacco, conventional banking setups, weapons. So all of these business activities conflict with Sharia principles. So as such, if a company is deriving their income from these sources, then automatically they're disqualified or they're no longer deemed as Sharia compliant. So following and looking at the screening methodology, if you want to go through the screening process yourself, right? But again, ETFs are a much easier way and a more effective way to gaining exposure to these stocks without having to do the legwork. So it's a faster way of achieving diversification and exposure to stocks without doing the hard work.
Yeah, so basically, as you're saying, right, like all of these asset managers and ETF providers, they will have a Sharia certified board or scholar who will actually look into the underlying investments, determine whether or not these companies derive their income from prohibited activities or interest-bearing activities or excessive leverage. So that's, yeah, it's interesting. It's kind of, it takes the work out of it for you, which makes
Absolutely.
it a lot easier.
Absolutely. Yeah, it really simplifies the whole selection process and helps you achieve, diversification very easily. And so stocks are for growth, right? If you want to build your portfolio and kind of position it towards long-term growth, stocks are the way to achieve that. And then the screening methodologies and the ETFs will help you achieve that. Now, going on to the next section. So stocks are for growth, but let's look at a more stable asset. And actually, this is your forte, so can you walk us through Sukuks?
Yeah, of course, happy to do so, right? And I think it's important to note, right? Not every single investment needs to be high risk. Not every single investment needs to be high reward. The nice thing about Sukuk is it provides a very stable, predictable way to actually grow wealth while staying Sharia compliant. But why don't we just start with the basics, right? What exactly is Sukuk? Now, Sukuk, it's often called, the Islamic fixed income or the Islamic alternatives to bonds, but there's actually a pretty big fundamental difference, right? With conventional bonds, you are lending money to a company or government and they pay you interest. Simple as that. But obviously, we've discussed, right, in Islamic finance, earning money from interest is prohibited. So instead, Sukuk is actually structured as a share of ownership in an underlying asset or project or sort of fund. And the investors don't actually earn interest, but they receive a share of the profits generated by the asset. So sort of like a profit sharing scheme. Now, the assets, they range, right? They can include real estate, infrastructure, energy products, sort of government initiatives, things that actually create real economic value. And this goes back to the point about tangible, assets. Now, why is this important for your portfolio? Um, Now, the main thing is because it provides a lot of stability and predictable returns, right? Sukuk already, it just provides a steady stream of income, making it less volatile than stocks, what we just discussed, right? And since they're often backed by real income generating assets, toll roads, power plants, commercial buildings, this is much more predictable in terms of their business activities. And that's what provides that stability. Now, another reason why it's important to include something like this in a portfolio is there is lower risk compared to stocks, right? Stock markets and equities, they fluctuate based on market conditions. Sukuks also fluctuate. However, they provide a much more consistent return profile, right? It makes them a lot more attractive for more conservative investors looking to kind of create balance in their portfolio, or even more short-term investors, right? Historically, if you have a shorter time horizon, you want to basically be exposed to a lower level of risk and less volatility. Now, what is interesting is, right, the sort of growth of Sukuk, it's not limited anymore to just Middle East or Muslim majority countries, right? Governments worldwide, including the UK, Indonesia, Malaysia, all of these different governments have actually issued Sukuk as part of their own financial strategy. So from an industry that used to be quite small from a market capitalization approach, it's actually worth over $800 billion, and those countries that I've mentioned, they continue to grow. So there's not really liquidity concerns or sort of market cap concerns that there used to be. And obviously diversification, right? You can also have a portfolio that has Sukuk and traditional fixed income, right? It helps spread risk. Whilst you might see your stock market component driving growth, Sukuk probably provides that stability, that income that smooths out these market fluctuations, but it also has a very different profile to conventional fixed income. And something I also wanted to highlight, right? I think a lot of the times we talk about these, I guess these investments as hypotheticals and how they kind of make up an overall portfolio. But I think something that's really interesting, I was reading about when doing some research for the webinar, to give you a real world example, right? The Dubai government actually issued a $2 billion sukuk to finance infrastructure projects, right? Including airports, the metro expansions. And instead of paying bond interest, investors actually receive profits generated by these projects. So it actually ensures that the investment remains asset backed, right? It's tied to these infrastructure projects, ethical as well as compliant with Islamic finance principles. And this is something that's quite rare. Usually governments will always traditionally go to these more conventional fixed income solutions, but it's really interesting to see that there is real world application to this. But to kind of summarize that, look, if you're looking to reduce some volatility, earn more stable returns, and keep your investments Sharia compliant, Sukuk is a pretty important piece of that puzzle.
Thanks, actually, and I like that you mentioned the Sukuk within Dubai, and maybe if you can tell our viewers what should an investor look for when assessing a Sukuk? What are the key elements that they should assess? And also, is there a place for Sukuks within a conventional portfolio, or is this just going to benefit a halal investor?
Yeah, look, I mean that's a tough one, right? Like, what do you actually look for when you're assessing, this sort of an investment? Because I think usually with more traditional asset classes, it's like, oh, I'll look at the price and the value and these sorts of
Yeah.
things. With fixed income and then also Sukuk, it's you get into a different world. Now, the key thing about Sukuk, it's like, look, is it asset backed? Or is it asset-backed sukuk, right? Like there is a difference between that. We want to
Mm,
make sure that it's tied to tangible assets, as opposed to just the credit worthiness of the issuer.
right.
That's the difference, right? A lot of times you might have a fixed income instrument, but it's not actually tied to tangible asset. It's just tied to credit worthiness of the issuer. In Sukuk, it's actually tied to these, tangible assets. Another thing is credit rating, issuer strength. Look out for Sukuk that's issued by a financially stable government or company with very strong credit ratings, right? This is that extra layer of protection, and this will help prevent that default risk. And I'd also say, look, something that's important, I mentioned it before, the liquidity and market access. Make sure that the Sukuk is tradable in a secondary market so it's easy for
Mm,
entry as well as exit. And I think this is not necessarily a must, but it's of interest. I think look at the underlying assets, right? Are you interested
right.
in why I mentioned about this project in Dubai? Make sure that the Sukuk is backed by high quality income generating assets, infrastructure, real estate, and this will help you predict, those returns a little bit easier. So I'd say that when you're looking at it for the factors, but you asked a question about should a conventional investor look for diversification through Sukuk? I would say 100%, right? A conventional investor can definitely use Sukuk as another diversification tool. It's quite different, right? It's asset backed, as I mentioned. The returns can
Right.
be a little bit more stable and predictable, a little bit less volatile, obviously, than your stocks. But most importantly, I would say, when you look at the data, Sukuk actually offers lower correlation with traditional fixed income securities. So that's the whole point of
Mm,
diversification, right? When you see a standard government issued bond, maybe in the United States compared to Sukuk, the sort of rates and returns are not actually aligned as much as you would think, because they avoid interest based debt. So it actually provides more diversification than you'd
Mm,
actually think. So I think it can be a pretty valuable addition to a well-balanced portfolio.
nice. Thanks.
Look, that was obviously about Sukuk. That was I guess we went from stocks, which is the driver of growth. We went to Sukuk, which is our sort of stabilizer in the portfolio. Now the next section is gold and real assets, right? This is what you consider as an inflation hedge in the portfolio, and it comes in many different forms. So Faisal, I'm going to pass it back to you just to talk about this.
Thanks, Akshay. Yeah, so as Akshay mentioned, gold and real assets do act as a hedge for inflation, right? And for those looking to safeguard their portfolios and protect them against inflation, gold and real estate can help you achieve this protection during economic uncertainty. So gold historically has been considered a very reliable store of value, and it tends to maintain and even sometimes increase its purchasing power when inflation rises. So it protects your portfolio during these economic periods and provides more stability. Real estate, uh, so typically property appreciates over time, right? Which will give you a hedge against inflation. And unique to property is that it provides a steady stream of income as well through rentals. So real estate can help you achieve two things, right? And its tangible nature makes it resilient during economic downturns, but also it can provide a stream of income. So together, gold and real estate significantly enhance your portfolio stability and offers really good hedges and protection against inflation.
So, talking about gold, right? I think a lot of people you hear the phrase gold has been used as a store of value, right? That's always the phrase. But how does it actually, I guess, help protect a portfolio from inflation? Like, what does that have to do with inflation exactly?
Yeah, it's a good point. So gold, again, its value typically increases during these volatile periods and these high inflationary periods. So it preserves your purchasing power and offers stability to your portfolio when there's a lot of uncertainty. So just recently, right, gold reached an all-time high. During the recent period of volatility. And this just really underscored its effectiveness as a reliable hedge against inflation, right? It's been used for centuries, right, as a store of value. So it's a very steadfast and tested vehicle for safeguarding our purchasing power against inflation. So really, it has been tested and trialed many times during many market downturns and volatility periods. So it has proven its worth within an overall portfolio, not just for halal portfolio, even for conventional portfolios. It really is an effective way to hedge against inflation.
Yeah, and it's an interesting one because we just actually experienced it, right? As you mentioned, gold just hit an all-time high. So good time to be doing a slide about gold and it working as an inflation
Right.
hedge.
Right, very relevant, very relevant. And as I mentioned, so gold and real estate are very traditional vehicles. They've been in use for a very long time. But going into a more gray area or a more nuanced or more modern asset, which is crypto and digital assets. So out with the old and in with the new. Over to you, Akshay.
Yeah, and I think this works well, right? Because you're just going off of a slide on more traditional inflation hedges, and a lot of people have thought of crypto digital assets as an inflation hedge.
Right,
Historically, at least they're meant to not correlate with more traditional asset classes. We've seen that sort of fluctuate over the last couple of years. But right, look, and I think the main question about crypto and digital assets is it halal? And
yeah,
it's definitely a groundbreaking financial revolution. And I think that's what a lot of people think of it. But then a lot of people also just think, hey, look, is this just speculation? I think the debate is still ongoing in the Islamic finance world. Um,
right,
Biggest question, right, is whether cryptocurrencies is permissible or not. And look, the reality is there is no one size fit answer, right? Islamic
right,
scholars are very divided on this issue. But I think to even take it back a little bit more, like what is the debate about, right? Why are we having this debate? And the main reason for it concerns speculation versus utility. And
mm,
we talked a little bit about this, right? A lot of scholars, they argue that crypto is too speculative and volatile, right? That makes it closer to gambling as opposed to investing, right? Since
right,
prices can, skyrocket or crash without a very clear intrinsic value. So some scholars actually see this as haram. But a lot of other scholars, they actually say, no, look, not all cryptocurrencies are created the same, right? Some have real world application as well as utility, especially the ones, that there are cryptocurrencies that are used for payments, smart contracts, decentralized finance. This means that whether crypto is halal or not will actually depend on the purpose and the nature of the digital asset. So I would say for the investors out there, if you are considering crypto in a halal portfolio, just keep in mind some of these factors, right? So the first thing is the nature of the asset, right? Is it a legitimate digital currency that's used for transactions, like your Bitcoins, or is it purely speculative, right? Some scholars, they argue that stable coins and certain tokens with real world application are actually Sharia compliant. They are halal. But when you come into the likes of some of those more speculative ones or meme coins, it kind of goes more on the side of gambling. Now,
Right.
the second thing is avoiding interest-based crypto lending, right? A lot of crypto platforms offer interest-based lending. This technically does violate Sharia principles. So staking mechanisms that involve guaranteed interest, like returns, this could also be obviously problematic. Um, and then the third thing is it's all about transparency and compliance, right? Some crypto projects actually undergo certification to confirm that they adhere to Islamic finance principles. These might be more acceptable for the more halal conscious investor. But what I would say about that is make sure that you look into it a little bit more for yourself, right? Just because it has a stamp doesn't necessarily mean that it aligns with your principles. So it's always good to do some more due diligence. Now, something interesting, right? That there is a bit of a role in with blockchain in Islamic finance, right? And regardless of the sort of debate on crypto, blockchain technology itself is actually widely seen as halal, and actually enhances Islamic finance. When you look, we talked about some of these principles: transparency, transactions on the blockchain, they are public, they are very visible. This can reduce fraud. It can ensure more ethical financial practices. Smart contracts, these are self-executing agreements that can be used in Islamic banking or Sukuk issuance, even in trade finance. So, this actually does align with Sharia laws. And then decentralization, right? Islamic finance promotes ethical, interest-free transactions. Decentralized finance has the potential to create some of these, more Sharia-compliant ecosystems in the future. So I think it's going to be interesting to see what happens in the future with this. Now, I guess the million-dollar question, right, is should crypto be a part of that portfolio? And as I said, right, scholars haven't reached a consensus. It's ultimately going to depend on you, your personal circumstances, your comfort level, and your risk tolerance, right? Um, I'd say risk tolerance is also very important because regardless of whether Sharia compliance or not, cryptocurrencies have huge potential for opportunity, by the way. You can make a killing, but there's also a very high chance that you might not because of the high level of risk involved. So if you choose to invest, focus on assets that have real utility, right? Maybe avoid highly speculative trading and make sure that it's in line with your definition of Islamic finance principles. And I'd say, look, regardless of where you stand on this, crypto and blockchain, it's shaping the future of finance. So it's definitely a space worth understanding, even if you don't decide to invest.
Yeah, thanks. Actually, I mean, this is a very interesting space because crypto has proved its staying power, right? It's a force to be reckoned with, and it's interesting that it's not. There's a divide for a reason, right? The asset itself, it's not that the asset itself is halal or not, but rather the use and functionality of those assets. So, could you maybe tell us of some actual examples of how this is being used within the framework of Sharia compliant investing?
Yeah, I mean, look, in terms of, how it's actually being used, right? I mean, even there's some crypto projects that align with these financial principles. Um, there's blockchain projects like I saw this one HAQQ Islamic coin. There's one called 1 gram. These have been specifically designed to sort of comply with Sharia guidelines. They avoid your interest-based transactions. It's in line with this more ethical finance practices. And I think as we said, right, for an asset to be considered halal or not, it should offer real economic value. Avoid this excessive
Right.
speculation and not involved interest-based lending. This makes the project, a lot more clear, tangible. There's some use cases for it and more aligned with, with I guess Islamic finance principles. Um, but I think that's something that you can kind of consider.
It's interesting, actually. When I was doing some research for the webinar, I came across this chat in Telegram. Essentially, it's a bot that you input the crypto's name or the coin's name, and it essentially tells you if it's halal or not. There is really it's, I would say, a vibrant topic within this community because a lot of investors want to add this to their portfolio, but they're not sure, right? Is this going to conflict with my beliefs or my religion? So I found that bot or that chat to be very interesting. I would take it with a grain of salt, or maybe if you understand the actual mechanisms behind it. But it is, crypto, as you said earlier, it's a force to be reckoned with, and it's really worthwhile to understand if it has a place for you in your portfolio. And I think this is true for all asset classes, not just crypto. But if you're on the fence about something, speak to a scholar that is, well versed within Sharia principles, just to understand if this is the right fit for you, and is in line with your beliefs and your values.
Yeah, and Faiz, I'm thinking back at one of your posts on LinkedIn a couple of weeks ago about in 2018 when you had invested in crypto yourself, and I'm thinking even back then, I personally the thought of investing in crypto was so out there. It just seemed so different and foreign and something I didn't understand. And what's the application in these things? And you fast forward a few years to today when
Right.
managers like BlackRock have actually constructed Bitcoin ETF. There's probably a lot more coming along the lines. But yeah, this is something to stay. I don't think it's something that's this purely abstract investment solution. It is a serious part of finance, and who knows, maybe it's going to be part of traditional finance going forward too.
Absolutely, absolutely. Thank you for going back to my old wounds. I think that is a time and a period that, looking back, I wish I invested more. But yeah, it was a very daunting space to enter. And just looking at how far it's come is really incredible. And I think um, it's worthwhile to understand, what crypto is and how it fits within this larger framework, and to see if it's a right fit for you.
Awesome.
Right. So we're nearing the end. So just to summarize, an effective halal portfolio will balance stocks for growth, spooks for stability, gold and real estate for inflation protection, crypto for diversification, if it's in line with your beliefs and values. So balancing these effectively can help you achieve your goals ethically and practically without compromising, potential returns and rewards.
Yeah, and I also say, on the last piece, right? Consult an advisor for personalized guidance. And I'd say
Yeah.
more specifically, if you have, questions about investments being Sharia compliant, make sure that you consult an Islamic scholar or somebody who is well versed in this realm specifically, right? They can provide you with a lot of guidance and a lot of information that will, make you feel a lot better. And as I said, specifically an Islamic scholar who will be able to assist with this. But yeah, I mean, that
Absolutely.
is the end of the presentation. I know we've got quite a few questions that have been coming through. So why don't we jump through to the Q&A? Thank you, everybody, for being so
Awesome.
patient with us.
All right. Let's see.
So we've got a question from Anonymous over here. I have a question about the interest being received in my Halal account. Is it the Halal one? Um, it'll, really depend which account you have. But if you have a Sarwa Invest Halal portfolio, or if you have a Sarwa Save Halal portfolio, it will not be interest that you are receiving. So what I would recommend doing is please feel free to reach out to us directly. You can reach out to our WhatsApp team. Um, and actually just share your details and they'll be able to tell you exactly. But as I said, if you do have a halal account, which you've said that you have a halal account, so in that case, if it's a save account, no, you're not receiving interest. And if it is an invest account, there is also not interest. You're basically receiving capital appreciation and dividends from your halal portfolio if it's on the invest side of things. And if it's on the save side of things, this is an Emirates Islamic money market fund. So very similar to the underlying instruments are going to be things like Sukuk, so not interest.
Thanks, Akshay. We've got another question from Muhammad. Muhammad asked, does Sukuk and gold have the same functionality in a Sharia compliant portfolio? And why do you need both? That's a great question. So Sukuks, as actually mentioned, they function as a Sharia compliant fixed income instrument, right? They offer predictable, stable income streams similar to bonds while still aligning with Islamic principles. So they help balance your portfolio and provide income and stability. Whereas gold, it primarily serves as a hedge against inflation, currency fluctuations, and market uncertainty, and it doesn't generate income, right? So that's another key distinction. So why you need both? I would say combining the two will increase your diversification, which is always great. And yeah, and again, the biggest differentiation is that Sukuk will provide income, whereas gold will not.
Awesome, Faisal. Thank you for that. So we've got a question here from Sadiq. Sadiq, thank you. He's one of our long-standing Sarwa clients, so always appreciate you joining our webinars. Is there a further filter on halal investing, which avoids companies that take debt? So maybe based on their gearing ratio, I haven't seen so not sure if they exist as such as a filter. Now, not that I'm aware of, right? Is there a filter on halal investing that avoids companies that take on debt? I imagine, right? Usually when an asset manager is constructing, let's say, a Sharia compliant ETF, there's three categories that they usually look at, right? The business activity filter, the financial ratios filter, and the dividend purification filter. Now, in the financial ratios filter, usually a component of that is looking at basically debt. So, well, actually, excessive leverage, debt, and interest, usually on the financial ratios. But I'm not aware of anything that is specifically on debt purely. But yeah, I think it's something that we probably need to look into, or even maybe consult with a scholar on exactly how they look at that.
Thanks, Akshay. All right, we've got another question from Krish. Krish asked, do Sharia compliant investment guidelines vary by region, or is there a universal standard that all Islamic investments follow? That's a great question. Generally, there is a universal standard that fund managers and Sharia certification boards adhere to. However, there are certain regional variations, mainly in the GCC countries, or if we look at Asian countries, Islamic Asian countries, there will be slight variances across the two. But a quick rule of thumb is if you're in doubt, as actually mentioned earlier, speak to a scholar or an expert within this field, an Islamic finance expert, to better understand if this school of thought is right for you and is in line with your own beliefs and values.
Yeah, and Faisal, I'll also add to that, what's interesting, right? I think as we've seen in the last, couple of years, a lot of these financial instruments are not just being issued from the GCC or from the Middle East, right? They're being issued from, other countries all over the world. So a lot of times
Right.
also, not just we don't just have to look at the Sharia compliant guidelines, but when these asset managers or basically banks are looking to issue some of these investments, they actually have to look at the nature of the overall investment
Mm.
market and region that they're operating in. There's going to be different liquidity requirements, there's going to be different capitalization requirements, and quite a few different things. So it goes kind of not just from the Islamic guidelines as per se, but also there's a big crux of it is going to be with how the instruments are listed and the requirements that those financial markets might need. Okay, so we got another question. How does the long-term performance of halal portfolios compare to the conventional ones? So the thing is, what's interesting about this is when you look back at, like, let's say the S&P 500 or another, index, those have been around for, over 100 years. The FTSE or the S&P 500, a lot of these indexes have been around for quite a long period of time. Their equivalent Sharia compliant solutions have not been around as long. So when you back test them, usually, right, because if you're looking at 100 years of data versus maybe, 40 or 50 years, as we know, right, the stock market tends to perform a lot better for those people who have invested for longer periods of time. So the conventional portfolios tend to outperform over a longer period of time, is what we've seen. However, right, let's look at the last 5 years, the last 10 years, the last 20 years, the performance is relatively similar, as Faisal had kind of looked at before, right? And the reason for that is what we mentioned, right? There's a lot of similar overlap, right? If you have a halal portfolio or a conventional portfolio, you are going to have exposure to similar asset classes, similar geographies, similar sectors. So you're going to go with that growth in the long term. So both are going to provide a really good solution. However, when we look back historically, the conventional ones have outperformed slightly, mainly because they've been around for longer.
Thanks, Akshay. We have a question here from Raid. Raid asked, I have a Sarwa Invest Halal portfolio. How do I determine whether the ETFs that I have are performing well? What's the benchmark? And more importantly, how do I calculate the annualized return on these Halal ETFs? That's a good question. I would say there are a number of benchmarks you can assess against. There's the Dow Jones Islamic Market Index, the MSCI Islamic World Index, FTSE Sharia Global Equity Index. So these are some of the benchmarks you can look at and assess against. Um, Also, I would say with regards to your own calculating your ROI on halal, your halal portfolio at Sarwa, reach out to our customer support. We have tools and functions within your dashboard that can help you, get this information through a statement very easily. So if you want more information on that ride, reach out to our customer support and they'll be able to help you with that.
Amazing. So I think we've got our last question over here from Anonymous. So why isn't there involvement in DFM stocks on the Sarwa platform? Based on my little research, there are multiple brokers that do have this access. So Anonymous, look, it's something that we haven't launched at this point in time, but stay tuned, right? It's something that we potentially might look to do in the future. So stay tuned and you will see more from this space.
Exactly.
Amazing. Perfect. Yes. So I think we have answered all of the questions today. Um, Faisal, thank you very much for obviously taking the time to do this with me today. I think it was super interesting. I hope everybody in the audience also enjoyed the webinar. Hope you enjoyed, obviously the questions and answer section. If you do have any questions about anything we've gone over today, please don't hesitate to reach out. We're obviously more than happy to help. There is going to be a recording that's going to be sent, after this webinar is done. And yeah, it's been a pleasure speaking with you all today.
Hey, always a pleasure hosting these with you. Had a great time. Thank you everyone for joining. Ramadan Kareem. Enjoy the rest of Ramadan and hope to catch you guys soon.
Yes, sir. Ramadan Kareem. Take care.
Take care.